Este pa' que te enteres, este es el detalle. Si caliente está la cera, más caliente está la calle.
Mira, llegó el son cubano.
Hola mi gente, and welcome back to another video from the We Are Investing channel, a channel that is dedicated in investing and personal finance. I know you guys love both of those things. You love making money, and this channel is for money makers and future millionaires. Now, on this video, we are going to go over 5 stocks that I think you need to be watching now, and if not, possibly even buying, because these stocks, in my personal opinion, have upside, are at good prices right now, and can really make you money long term or short term. We're going to dive into all of that and more on this video. But before we do that, you know the deal. Hit that subscribe button, ring that bell if you haven't already, so that YouTube notifies you whenever I upload another video. And turn that like button blue. It goes a long way in helping the channel grow, and I really do appreciate it. And also, please be aware that there is a Patreon for this channel. Whenever I open or close a new position, I post on the Patreon so that you can follow the portfolio in real time. You also get access to a Discord server of over 400 members, and you also get early access to videos. I upload to the Patreon before I make the videos public on YouTube. You're going to get 3 things that could help you be a better investor or trader for just $5 a month. I think it provides tremendous value to all investors and traders. And we are building a community here. That is why this is called We Are Investing and not I Am Investing. And I think that the Discord channel really helps out investors. We stay communicating, we stay talking about stocks, and we stay presenting great opportunities to all investors and traders. But enough of the blah blah from me. Let's talk about the 5 stocks that I think are top buys right now. Now, if I open up a position in any of these, I have positions in 2 of them. But if I open up more positions, you will be notified on the Patreon. All right, let's get this show on the road and talk about these 5 bangers, these 5 stocks that you do not want to miss out on. The first is Palantir. It's traded on the New York Stock Exchange, goes under ticker symbol PLTR. The current share price is $29, and the stock on Friday went up 15.22%. Now, the stock did dip, but we still have room to grow. And I made a video on this stock during the dip. We are buying stocks when they're dipping because it is a bull market and these stocks are recovering. And Palantir has tremendous volume. It has tremendous coverage. People know about this stock. People want to buy this stock, and I can definitely see this stock continuing its upward trend. Now, if we take a look at the charts, this is the 1-year chart for Palantir stock. We can see that we have a support at around $23.50. That is the risk that I would imply on this trade. We're trading around $29, and we're also breaking some prior resistance, which is tremendous bullish activity and means that we can continue up even higher and test those highs at around $37, close to $40 a share, maybe even set all-time highs. Now, there was selling pressure in this stock because from the direct listing, there was a lockup on a lot of the shares, and that lockup ended the 3rd day after the earnings report, which was Friday. So let's see what happens here, but I definitely think that the stock is going to rebound. We might not get to those prior highs because we could see insiders selling as the stock continues to grow, but we have broke that prior resistance. So we're going to gap up somewhat. I don't know how much higher, but this is a stock that you need to be watching. This is a stock that we are in, and this is a stock that I think money can be made on. Now, the next stock on the list is Immersion, ticker symbol IMMR. This is traded on the NASDAQ. The current share price is $12.11. And on Friday, the stock dropped 4.19%. Over the last week, the stock has dropped 19.41%. There is going to be a theme here. Buy the dip, buy low, sell high. That is what people are trying to do here. And one of the strategies that you can use to buy low and sell high is buying dips. However, I will caveat that by saying wait for confirmation. If a stock is dipping, do not try to catch a falling knife. Identify a key level of support, see what the stock does at that support, and wait for confirmation on the rebound before entering into a stock. You don't have to time the bottom perfectly, right? But if you buy after the stock has rebounded and starts going up a little bit, that is the perfect time to get into a stock. You're not trying to catch a falling knife. You waited for confirmation, and then you you are smooth sailing to Profitville. Because we know investing in securities is not secure, there is risk here, so we're just trying to minimize our risk when we imply that strategy. Now, I think that this stock is heading towards a support and should rebound on Monday, but it might not do so. The stock has a support at around $12.10. The next level of support is around $10.75. That would be the risk if you got into the stock right now, and that is where I would stop loss out. But that's a decent amount of drop. To go from $12.11 to $10.75 is a decent drop. And you want to avoid that if you can, and that's why we try to wait for confirmation, because the stock could continue to drop to under $11 a share if it does not bounce at the support and that support does not hold. However, this company did announce preliminary results for the fiscal fourth quarter of 2020, and they look pretty good, and I think they are going to blow people away with their earnings report. They are expecting a 40% sequential revenue growth and a GAAP and non-GAAP EPS between 27 cents a share and 29 cents a share. Earnings for this company will be reported on March 4th, 2021. That is a key date for this stock. You might not want to hold past earnings because sometimes the stock does rally a ton, and we could see a huge rally in IMMR leading up to earnings, or you could hold this stock through earnings if the stock does not move a ton and then see a great pop after earnings as well. However, when you do enter into a trade, it's best not to hold a stock through earnings because they can be extremely volatile and they add an extra level of risk. Now, another stock that I want to talk about on this video is Walmart. Now, if you don't know what Walmart is, let me tell you, in the next 30 minutes, we're going to do a deep dive in Walmart stock because I know you guys don't know what Walmart is, but this is an up and coming company in the e-commerce sector. I'm just kidding. All of us know what Walmart is. It's a huge company. A lot of you guys might not want to invest in it because the share price is too high. However, this is a blue chip stock that had a dip, and we're sticking with the theme here. Buying stocks in a dip, buying good companies in a dip to make money. Now, as you can see here, Walmart trades under ticker symbol WMT, has a current share price of $138.34, and this week it had a pretty decent drop following earnings, but earnings were not that bad. They were actually really good in my personal opinion. Now, this is a stock that I think will rebound. However, some of these stocks, these blue chip stocks, when they drop off of earnings, it could take some time. They tend to consolidate for a couple days, and then you'll start to see movement upwards or downwards depending on if the consolidation holds and we break a resistance or a support. If we break the support, the stock heads down. If we break the resistance, the stock heads up. And also, if we take a look at the 6-month chart, we can see that there is a pretty good support at around $136.25, which could hold. We definitely want to keep an eye out on that level to see how the stock responds. And we also want to take a look at the consolidation range for Walmart stock over the next couple of days. Another basic trading strategy that you can implement here is the 3-day rule. Following a drop off of news or earnings like Walmart stock did, you wait 3 trading days. Usually by then, all of that sentiment is out of the stock. We're not trading off of that news anymore, and things go back to reality, and that is why we can see a increase in the share price following 3 trading days. That is also trying to reduce the possibilities of trying to catch a falling knife. You wait a couple days, let the news settle, and you're increasing your chances here and not getting into something while it is still dropping. However, the strategy that I like to use is wait for confirmation. Like I said earlier in this video, I am willing to pay more per share if I know that the stock is heading upwards or there is a good sign that the stock is heading upwards, because you never know in the stock market. Nothing's a guaranteed. But when you start to break resistance and setting higher highs and higher lows, that is a very strong signal, in my personal opinion, that the rebound is starting, and that is when I like to get into a stock. Now, Walmart also had news today that they announced plans to invest $14 billion to become the primary destination for customers. What happened is that the retail giant said in its fourth quarter announcement that it was going to spend $14 billion on enhancements, including in automation, supply chain, and other areas that might boost long-term sales. The reason why this matters is the company reported 69% growth in its e-commerce business in the fourth quarter and said it expected $100 billion in e-commerce revenue in the next couple of years. Tremendous value there and huge growth for a very established company to have 69% growth in e-commerce business is absolutely phenomenal. They also said that developing sales online is not an easy thing to do right away. You've got to have an assortment, you got to have the price, you've got to provide service, you got to deliver when you're supposed to deliver, and it takes time to build those kinds of capabilities. So Walmart stock is going to be a giant in e-commerce. E-commerce is the way right now. It's going to remain the way for as long as I can see. And this company is establishing. They're one of the leaders in e-commerce. And also, I really like the focus on grocery that Walmart is having. They could be one of the biggest companies delivering groceries to you. And that is also something that I am bullish on for the future. All right, so I introduced 3 stocks. We got 2 more to go. And the next stock is FRX. This is traded on the New York Stock Exchange. This is a SPAC, a blank check company that is absolutely taking off. And I think there is potential here with this company. The current share price is $14. On Friday, the stock went up 14.69%. So the stock is starting to move. Wait for a dip here or wait for a good buying opportunity. But definitely add this stock to your watch list. Now, this company is merging with Beachbody, which has the Beachbody products, the MyX Fitness and OpenFit or Mix Fitness. I might screw that up. I'm not familiar with the product, but the investor presentation, the values look stellar and the potential growth here looks tremendous. Now, this is a company that is diverse. They have multiple products, which is really good as well. If we look at the revenues for this company, in 2021, it's estimated to be at $1.1 billion. In 2022, it's estimated to be at $1.5 billion. And we have a 2020 to 2025 compound annual growth rate of 30%. Great growth in this company. Now, why I think that this company has potential is because they have a business that is very diversified in the fitness sector, but also that MyX Fitness bike can compete with Peloton. And because this is a decent sized company, I think that they have the strength to really battle with Peloton and be the second competitor behind Peloton. And that is a tremendous market cap that has a lot of potential, and that could really drive sales for this company more than expected. And it's something that has grown a lot. Peloton has a huge market cap, and I think people who ride Pelotons, people who made this shift during the pandemic, are going to stay with their bikes long term. So I don't think there's going to be a huge fade off when people start going back to the office, going back to work. I think people are going to remain doing what they did because humans are creatures of habit. And once you set a habit, it is very hard to break it. And I think that this is very good for this sector. Now, the last banger that I want to bring to your attention is SBG. It's traded on the New York Stock Exchange. It's currently trading at a share price of $10.50. This is a SPAC, right? And with SPACs, your risk is around $10 a share if the deal does not go through. And this SPAC does have a business that they are trying to combine with. It has a business target, and that business target, in my personal opinion, has tremendous potential. Now, it might not get the valuation it deserves. It might not get the attention it deserves. But let's talk about why this could be a great investment. And right now, with the share price being at $10.50, the risk is low, and I'm going to be entering into this stock ASAP. Now, the product, the company we are talking about is Owlet. You might have not heard of it, but ask your wife, ask your girlfriend, or ask your grandmother. So many women know about this product. It's a huge seller for newborns. And the reason why it's a huge seller, is because it provides peace of mind. Now, this might be a little bit sad here, but with newborns SIDS, which is sudden infant death syndrome, that is the #1 cause of death in infants 1 to 12 months old. And this product provides peace of mind. It is a monitoring device for newborns when they are sleeping, and it is a huge seller. The Instagram for this company has over 250,000 followers. So many people know about this product. And also, the people that are having babies today are more tech savvy, and they're willing to pay the price for this kind of product for peace of mind. A male, myself included, I don't think it's worth the price because it's expensive. And does it really provide that much peace of mind? Is it worth it? it. Babies have been around since forever, and we didn't have this technology and they did all right. Do people need to buy this product? My personal opinion is no, but yet people buy it left and right. So many people are buying this product. And that is why we are seeing great growth in revenue. In 2020, it's estimated that they're going to have $75 million in revenue. That is a 51% year over year growth. 50% is tremendous growth. In 2021, $107 million. That is 43%. 2022, estimated at $174 million, 62.9%. And at the end of the day, the projections at 2025 is estimated to be at over $1 billion in revenue. That is an 83.1% increase in revenue. Ginormous increases here, guys. I definitely think that this company has great potential here. And that is why at $10.50 with low risk, I think it's a buy, and I'm going to be adding shares to this SPAC. All right, guys, that wraps it up for the 5 stocks for this video. I hope that you enjoyed it. If you did, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Turn that baby blue. Do not forget about the Patreon page where I post whenever I open or close a position. You get early access to videos and also access to a Discord server of over 400 members. Down below in the video description, I got more for you guys. I got a ton of stuff here. We got a Facebook group. We got my Twitter page, which I post on there as well. And also, I got promotional links that can get you 2 free stocks worth up to $1,600 in Webull. All of that stuff is provided down below. But that wraps it up, guys. You know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, yes, together, we are invincible. See ya.